that right. Money. 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 You got that right. Money. Money. You got that right. Money. 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 You got that right.
This DVD has been produced in response to the tremendous escalation in the use of managed futures as investment vehicles worldwide over the last 30 years. Also, in the wake of the tremendous volatility having occurred worldwide recently in the financial markets, the producers felt that an educational DVD aimed at financial students, novices, as well as experienced investors, both individual and institutional, will have a timely and important function fulfilling an ongoing need for education and understanding of this large misunderstood investment asset class, giving the very real international lack of investor confidence that has accompanied recent global financial events. Educating and informing the investors public is a very real and urgent priority. The producers of this DVD hope that in some small way they are helping to achieve this goal. Futures and futures option trading carries significant risk, is not for every investor, and only risk capital should be used. Past performances is not necessarily indicated of future results. As a person who chooses to use this information as a basis for their trading assumes also liability and risk for themselves.
Confusing, isn't it? Hi there, this is Aidan Doyle. Some of you watching now may recognize me as the host producer of New York City's On the Money show. But today we're not here to discuss financial commentary. Today we're here to examine an area of the market that's getting very little coverage and quite frankly deserves more. The title of this presentation and DVD is Understanding Managed Futures. And for the next hour or so I'm going to try to, in the best way I can, go through what managed futures are, explain how they work, and hopefully at the back end you'll have a reasonable concept of what the expression means. Okay. Thanks once again for joining us. Before we go into details, I want to prep you on the format of the show. As I've indicated, the topic of the show is Understanding Managed Futures. I'm going to, as I indicated, prep you on a presentation. We're aiming this show predominantly at UK and US investors. Now that's not to say that the concepts that we're analysing won't apply to the rest of the world, but predominantly the references within the show will be aimed at America and Great Britain. Vis-a-vis regulatory references, tax references, and comparisons to the various stock indexes. Okay, that said, I have one more thing to add. We'd also like to point out that the show is aimed at viewers that have a working knowledge of futures, understand how they work, and they have the basic concepts. Should you be completely in the dark as to futures and what they, how they work, I suggest that you do a little homework before watching this DVD. Perhaps you could watch one of my past episodes of the On the Money show, namely Hot Commodities or Leverage, which are both two episodes that have a reference to the subject matter of this show, and then come back to this show once you've got a bird's eye. Okay, before we proceed, publication. Managed futures. The first place to start, obviously, if you're interested in learning about any subject, is by getting a definition of the subject. we have decided to present this show using graphics, namely some slide projections, so that we can have a visual aid, so that as well as narrating the show, you can also see and grasp some concepts while I'm discussing them. So, that said, I'm going to ask my colleague in the control room to put up slide 2 of this presentation, which should be entitled, What are Managed Futures? When it does come up, you'll see that managed futures essentially is a catch-all term. It simply refers to a group of industry professionals known as CTAs in US terms. As a note, they are called DFMs in the UK, whose business is trading advisory, who manage client assets on a discretionary basis using global futures markets as an investment medium. Long story short, these guys trade on behalf of clients on expected profit potential. That's the end of that. That's the end of that slide. So now you know what managed futures means. Let's go on to discuss a bit more about them. Okay. Before we get on to managed futures and what they are doing today, let's look at the growth of managed futures, which essentially will give us a bird's eye view of what they've done in the past and where they are currently. I'm going to ask my colleague to give me slide 3, which is entitled Growth of Managed Futures, and which should give us a graphical representation of the growth of the managed futures industry to date. Now, I'm sure you'll be impressed with what you can see in front of you, ladies and gentlemen. This graph reflects the growth of the managed futures industry globally for the last 10 years. From what you can see, obviously, you're looking at a 700% spike in the figures, and there's no question that that is nothing more than explosive growth. Thank you very much for that slide. One of the questions I would be asking if I was you is, well, why has the market accelerated so quickly, and why am I not aware of it? The short answer is this. I don't know what the demographic is of the viewing audience, that's yourself, whoever's watching this DVD, but I'm pretty sure that most of it is retail. That means you are an individual investor, you're probably not an institutional investor, therefore managed futures, the expression and the marketplace would be reasonably new to you. In other words, long story short, banks, insurance companies and mutual funds historically have been the primary users of managed futures, but it's becoming the case that retail users or retail end users are beginning to discover the benefits of managed futures. That's why you're watching this DVD. Okay, that said, I want to move on to something that's at the very core of managed futures and why they're in such popularity and use. If you look at the next chart, which is called investment classifications, I will explain the nature of the categories and why, as an investment or an investor, you should be aware of what investments fall into which categories. Okay, as clearly indicated, we have an investment universe which defines the entire range of investments, and then it's broken up, as you can see, into two main groups. The group to your left is what you are probably familiar with, whoever you are watching this show. It is the common or garden stuff that you and I have done before, which is cash, which is bonds, which is equities, and which is real estate. However, the category to your right is where most people will go into uncharted territory. As you can see, we're talking about hedge funds, managed futures, which is the subject matter of this show, and private equity and credit derivatives. Now these, ladies and gentlemen, as you may have heard in the press, are the exotic investments. These are the things that are complicated, but if used judiciously, can add value or potential value to your portfolio. That's why we put this DVD together. Alrighty, thanks for that slide. To put all this in context, I want to look at another slide very quickly, which is the managed futures diagram. Now this is a pictorial reference to the benefits of managed futures within a portfolio, an investment portfolio. As you can see, they've basically detailed four major benefits, being A, access to global markets. This means that managed futures have a tremendous access to global markets all around the world. Again, we see professional money management, which means that your investments are handled by professional money managers, CTAs. I will explain what CTAs are in due course when we get to regulators. To the right hand side, you'll see portfolio diversification. That means that you are diverse in your investment. It means that you're not putting all your eggs in one basket. It means that you are spreading risk and therefore, by definition, hedging your exposure to loss. And last but not least, towards the bottom of the chart, we see liquidity and transparency. And this means, transparency I'll define for you, it means you're able to see what your money's doing and how you're getting along by virtue of the fact that most CTAs or brokerage firms will give you online access to your account. Liquidity is a very tenuous subject. I need to be clear here as to what that means. It means that your investments are liquid in as much as the positions that your CTA will have entered into are liquid, but it doesn't mean, and I want to be clear here, that the investment itself is liquid as far as you're concerned. It does not mean that you can grab your money or can liquidate your positions at any one time. So I want to be clear of that. Okay, that takes care of the overview. Now I want to proceed to go through what are the... by the way, this is going to be a balanced presentation. I'm sorry to digress, but I want to be clear on this. This is going to be a balanced presentation. By that I mean I'm going to identify all the benefits of managed futures as per the list that I'm just about to go through, and then on the back of that I'm going to be talking about the risk involved in such investments, the downside and the potential for loss, which is very real. So we'll go through the benefits first and I'll get to the risk disclosure statements after that. Can I see the slide for benefits of managed futures, please? I'm going to enumerate these one by one, and then we're going to go into more detail. As you can see, we're going through from 1 through 7. I'm going to do this very quickly, and we're going to go through them one by one in more scope. 1 is the potential to lower overall portfolio risk. 2 is the opportunity to enhance overall portfolio returns. 3, as you can see, is broad diversification opportunities. 4 is opportunity to profit in a variety of economic environments. 5 is limited losses due to a combination of flexibility and discipline. 6, we looked at briefly, but it's back with us, is liquidity and transparency. 7 is a point that's not normally referred to in most of the textbooks, educational material, and or on internet websites, but I put it into this presentation because I consider it to be a very real benefit, which is taxation benefits. It is a fact of statutory law that in some countries, under certain circumstances, managed futures can benefit you over and above a normal equity investment. So, I'm now going to take a breather and explain certain concepts to you. Just as I indicated before I enumerated all the benefits of managed futures, this presentation is being undertaken by my company, which is Bellwether. Can decide to enter into an investment of this nature, that you will have had all the facts presented to you in a clear and complete fashion. So, having said 1 through 7 are benefits, here's a disclaimer. There is a substantial risk of loss in trading futures and options. Therefore, you should carefully consider whether trading is appropriate for you in light of your experience, objectives, financial resources, and other relevant circumstances. There you have it. What that means is, in English, it means managed futures is a leveraged investment. It is a very high-risk investment. It has a place in judicial portfolio management, but you should be clear that there is a very real loss of all, or very real risk of loss of all or part of your investment. That takes care of some risk disclosure. I want to move on to enumerate the list of benefits of managed futures. So that said, can I go to the next slide, which it should be potential to lower overall portfolio. Ladies and gentlemen, before we go any further, it's time we looked at a very fundamental concept of managed futures and their potential to diversify your portfolio, and it is the impact of correlation. Now, correlation is the relationship between one thing and another. In other words, those of you out there that have any stock market expertise, specifically anyone out there that has taken any brokerage exams, Series 7, Series 63, Series 24, or studies finance to any degree, will understand the example that I'm just about to give you. It is perfect in defining correlation or setting up exactly what the word means. I'm sure this will be basic to you, but stay with me. There is an inverse correlation between bond prices and interest rates. What that means is, if bond prices goes up, if bond prices go up, interest rates go down, and vice versa. If interest rates go up, bond prices go down. Now that relationship, ladies and gentlemen, is a minus correlation. That means that they move in opposite directions. Zero correlation obviously means that they are completely independent of each other, and that is a fundamental tenet of the futures market. If you can grasp that concept, then you are on your way to understanding why managed futures have a very real role to play in protecting you against major market declines in certain areas of the market. Okay, I'm glad I got that done because that was a tough one. There is a great deal of science and thought that has gone into investment portfolio research before I go. Now, basically, I'll read it, but it's there for you to read as well. And obviously, when you get the publication that accompanies this show, you'll have a lot more time to go over these things, rewind the DVD, and basically refresh your understanding of these concepts. However, including up to 20% of total investments in managed futures funds enhances portfolio diversity and therefore greater independence from general market moves. That's exactly what it appears to be, and it is an opinion, but it is based on research. What they're saying is, they're saying as an optimum figure, if you add, thank you for that slide by the way, they're saying as an optimum figure, if you add 20% managed futures to a portfolio, you will greatly enhance your diversity and you will have greater independence from general market moves. I'll tell you why you'll have greater independence, because you have added or you have reduced your correlation to the market. These things will all start to make sense as you look at the PowerPoint presentation, which you'll get obviously, and as I work my way through the show, which I'm doing as we speak. Okay, once again we are back to risk disclosure, which I'm mandated to do. So having said the above, which was a quote-unquote pro-future statement, I'm obliged to read the risk disclosure, which we'll get to right now, which is as follows. While managed futures offers such potential to profit, this type of investment is highly volatile and speculative. Thus, an investor must be prepared to lose all or substantially all of an investment. Past performance is no guarantee of future results. That last sentence I'd like to expand upon, if I may. This is a general disclaimer that will appear, and you should be very aware of, on all investment or pro-investment related materials. Past performance is no guarantee of future results means that you will constantly be told in any recommendation, in any publication, website, blog, email, that this guy made so much money, that guy made so much money last year. Past performance is no guarantee of future results means that doesn't mean that he's going to make the same amount of money this year. Common sense, I know, but it needs to be said so that once again we are imparting a balanced view. Okay, we're moving along very nicely here to one of my favorite slides, which is broad diversification opportunities. Now this, when you see it, is really what it's all about, ladies and gentlemen. This pie chart tells you who managed futures are, what they are, and basically it tells you if you have a managed futures account where your money will probably, the pie charts where your money will probably end up. This is the definition of diversification as far as I'm concerned, which is an opinion, but if I read the heading to this chart, it should give you some kind of view as to just how broad and diverse these instruments or these managed futures positions are. Here's what's going on. The list below is only a partial list of the futures products currently available around the world. Let's look at what's available, shall we? We have, I'll do it in terms of size. We have individual equity futures. That means the various indexes, the S&P 500, the NASDAQ, the FTSE, the Nikkei, the world global stock markets. We have interest rate futures. These are positions on interest rate futures. They're financial instruments. We have FX, which is, as the name implies, is currency trading, speculating on movements in currency prices. Then we go on to the physicals, which are metals, commodities. We also are looking at energies, and of that represents a bird's eye view of what the futures market is composed of. That is very diverse, and that is why futures as an investment gives the overall diversification that is possible. All right, That's a pie chart that I very much appreciate. I'd like you to look at it when you have more time and ask yourself if there are any more markets that you could possibly be in. I can't see them, but I'll defer to your opinion. Let's look at number 4 now, which is going down once again the list of benefits of managed futures. Number 4 is opportunity to profit. Slide number 4, please, which is opportunity to profit in a variety of economic circumstances. What this means is, these slides are okay. I want to take a time out for a second because I don't want you to glaze over when I'm reading these slides. You can read them for yourself. I'm here to give you an opinion, or narrate, should I say, the content of this slide and make it easier for you to understand. This slide means whatever the markets are doing, whatever the economy is doing, whatever global events are taking place, whatever's happening in the world, managed futures can take advantage of it. That's what is meant by the expression opportunity to profit in a variety of economic environment. That's what the expression means. Okay. The sentence says, this is a reference to a period which was a bad period in my life, which refers to the stock market crash in 1987. And this chart is all about showing what happened to the marketplace and comparing it to what managed futures did for the same time frame. Okay. As you can see, the narrative will tell you the stock market crash in 1987 was the largest one-day loss in history. Actually, that may have been surpassed over the last 3 months. This material comes from a publication which was issued around sometime in late 88. But however, for the purposes of this presentation, let's just say that this stock market crash was a bad one, and similarly, after the terrorist attacks in 9/11, the stock market plummeted 16%. This chart compares what the managed futures industry did in the same time frame to what the stock market did, and as you can see, it just goes to show you that if you had a position in managed futures at that time, you would have come away relatively unscathed. Once again, having said that, I am back to risk disclosure, I am back to full disclosure, I am back to transparency, and I am back to the past performance is no guarantee of future results. There is a caveat. This is a chart, and as such, it makes reference to a time period. It needs to be said that there can be no assurance that the investment objectives of a managed futures fund will be achieved. It also has to be added that investing in managed futures is speculative, and investors must be prepared to lose all or substantially all of their investment. And once again, let's get back to our old friend, which is past performance is no guarantee of future results. We are doing this in a balanced view. I know that adding these risk disclosures is monotonous, but once again, for those people watching the show who have a intention or are looking to seriously investigate this side of the market, adding these risk disclosures is actually the diligent and prudent thing to do. It means that you have all the information, you can digest it, and it means you can make an informed decision. Okay. Having said that, I'd like to go to slide 5, which is limited losses due to a combination of flexibility and discipline. This means that the idea behind this is that managed futures, or the management of managed futures accounts, are easier to manage, how can I put it, are easier to trade and handle. It's an easier discipline to trade than the stock market. In other words, there's an expression called drawdown, which means the ups and downs of the markets and highs and lows. And the chart you're looking at shows the worst drawdowns for November 1990 to February 2008. Long story short, the idea behind this chart is managed futures make it easier to handle market adversity. But once again, there's a caveat here. Most managed futures trade with stop losses, just as stock markets do, but it needs to be said that the use of stop losses or stop limit orders, which is intended to limit losses to a certain amount, may not be effective because market conditions may make it impossible to execute such orders. I have to read the last sentence of this risk disclosure, and then we'll move on to the next slide. The last sentence is, and again we just did this, but it's for the purposes of a balanced view, there can be no assurance that the investment objective of a managed futures fund will be achieved. Investing in managed futures is speculative, and investors must be prepared to lose all or substantially all of their investments. Now, I know this off by heart now, and that said, I have to believe that you, the viewer, will be getting the idea. Okay, we're nearly through the benefits, you'll be pleased to know. Slide 6, which I'm hoping will be on your screen shortly, will give us two major benefits, which I'm going to go over very quickly, which are liquidity and transparency. And if I may, can I have slide 6, please? Thank you. What you're going to, there are two captions here. It's a very short slide, but liquidity means that investments in managed futures are in a very liquid market. It does not mean, as I said earlier or alluded to, that your actual investment within a managed futures account is liquid to or should be considered to be liquid. It is possible, and market conditions can make it possible for your investment to be illiquid at any one time compared to another. Okay, I'm glad I got through that. Transparency is what we alluded to earlier. It is the same thing I just referred to. It means that if you have a brokerage account with managed futures in, you can keep an eye on what's in the account. You probably have a online access via your FCM, which is your brokerage firm, and it just means that it compares it to, let's say, less transparent investments such as off-balance sheet private investments, equity investments, and some various classes of hedge funds. So we are moving on at a great speed here. I'm impressed with myself even. I want to look at number 7, chart number 7, which is going to wrap up the benefits, which is, thank you very much for your timely inclusion of the chart, which is the tax benefits of managed futures. Ladies and gentlemen, I've told you that most of the research, most of the studies, and certainly most of the NFA member firms or SFA member firms in the UK will list maybe tops 5 benefits of managed futures. I have chosen to include 7, which are tax benefits, because I consider the tax impact of an investment to be a significant factor. I also feel that if there is preferential tax treatment to an investment, you should make it a factor in deciding whether or not to enter into that investment. The chart you'll see is just an overview of some tax legislation. I'm not going to read it, but it does say that in some cases, certainly in the USA and the UK, there may be advantages to investing in managed futures, but there is a very big disclaimer here and a caveat. We are not here to give tax advice. We are here to give you some general overviews, and if you are looking for tax advice, certainly in terms of this benefit, please consult your financial representative. That, you'll be pleased to hear, is the wraps up the benefits of managed futures, and I am going to be going back to that subject, but in on a more balanced view in due course. I want to look very quickly at the slide it doesn't fall into any of the categories, but it is relevant. Can we please see efficiency and performance of futures markets, if I may, from the control room? Thank you very much. This is really where it's at. This chart is the first thing that clients ask me when I bring up the expression managed futures. They say, and I quote, well, what have they done versus the various market indexes? Why should I consider them? Are they, what's the upside? What you're looking at here is the last 27 years of action on the, if I can read it, the S&P 500 and the managed futures CSIDM index, and an international stock index, which is another basket of equities. As you can see, the managed future position has outperformed the stock markets. Once again, this is a chart, it's a historical representation that